Greetings, Dr. Jeffrey Scott, and this is my Market MRI Pro update for, it's Monday, 12/29, 2025. Boy, this year's almost over, and what a year it's been. Um, I love years where we set big time lows and have a run off of it. Um, just got to have cash left when you hit the lows. Title today was Major Indices End Lower as Climax Run in Metals has a meltdown. Now, it could have just been a little bit of profit taking, maybe some fear with the vertical run, especially in silver. But I think it's something we're going to have to watch. I mean, we saw Bitcoin break and it hasn't gotten back. Today we saw metals break across a wide spectrum. Our stocks next. Again, my name is Jeffrey Scott, marketmripro@gmail.com. Google group is called Top Down Trader, and my website's marketmripro.com. As always, this and every program I do is for educational purposes only. Anything I talk about should therefore be taken in the spirit of education and not investment advice. The intent of all my videos is to demonstrate my tools for top-down analysis and how I use them. Trading involves risk. You and your owner are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisors. And I've got tools in multiple platforms. Join my Google group. It's called Top Down Trader. Just go to Google Group, look for all groups, look for Top Down Trader. Tell us how you want to be contacted. You control your membership. You want to quit, you quit. You want to join, you join. Um, my job is to educate you, give you some information that you might find useful, sometimes during the day, invite you to my free educational programs, and when not in a already discounted mode, potentially have additional discounts to Top Down Trader members on my tools. Speaking of discount mode, I launched the program middle of the year, gradually have gotten the user base up to a nice number, but these are all what I almost consider friends and family. These are folks that have known me for a long time. A few people came in from the Wealth Charts experience, some from the YouTube, but many of you are folks who have been following me and worked with me for a long time, and many of you got to sit in the Ian Woodward meetings just like I did. Um, I'm going to go to what I call the public launch tomorrow. Now, I can't find a link that I can give you, and I'll see if I can get one in the morning and place it on Top Down Trader and also in the YouTube. I'll add it to the remarks section. 2 o'clock tomorrow, the Tickblaze community is going to have a webinar that I'm presenting at. I mentioned in a note to the Top Down Trader members, and I also mentioned, I think in a couple of videos, that my price is going up. It's going to go up a lot. Why is it going up? Well, one, I'm selling a lot. Two, the more I sell, the more server space, faster servers, and data cost I have. And I priced it like indicators and not like a full platform. So the good news is you don't have to pay the new price. Why? Because I'm going to start it right now, and it's through 11 o'clock on January 5th, 11 p.m. I'm going to offer the MRI Pro tool, which the regular price is now $26.95. My indicator package for TradingView, which is $5.95. We'll be holding a jumpstart webinar on Saturday at 11 a.m. to help new and old users to make sure that they can use it and get their money out of it. Excuse me. And I'm going to do it at that $14.95 price, which was the same price that I gave for Black Friday. It'll never be lower. And in fact, the sale price is going to go up close to where I had the retail price when I launched it to friends and family. Um, Annual fee is going to be $4.95 for year two. After that, it will be dependent upon my server and data costs. When I first launched, I said it probably would be $5.95. I was able to bring it down to $4.95, but we'll see where we end up. I can't predict where we're going to be in 2 years from now. It's never going to be much more than that. $8.95 is probably the max it would ever be, but I'm going to try and keep the annual fee as low as possible. Again, Jumpstart webinar on Saturday. I'll put this link in the remarks sections, tinyurl.com. It's just MRI 0103 2026. I'm going to have a mentoring session planning on my birthday, January 31st. Access to Google Group Top-Down Trader. Everybody should do that for support and continue my commentary I do at night. And I think the folks on the last meeting got really excited when they saw what Praveen did for sharing layouts. We made it as simple as typing in a number. Know your news and earnings. Tuesday could be interesting. You know, I didn't think about it. I'm going to be doing my presentation just as the Fed's minutes come out. So hopefully people will be paying attention to me and not just looking at the minutes. I'm not sure if any of us should expect a lot to occur with those Fed minutes. I think that we know there's some people were pro, some people were against the rate cut, some people wanted 25 points. And when I looked at the Fed rate tool um, over the weekend, it's about 25% are expecting a cut in January. So I don't think anything's baked in or nothing significant. So I'm not sure that's going to hurt the market. Wednesday's jobless claims, that could be interesting, but we don't have to worry about that until after I'm done with my webinar. No major earnings this week, and the next quarter earnings season starts on the 6th. It is a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. For more information, if you want to reach out to me about Market MRI Pro, I'll send you the link. Um, it's just marketmripro@gmail.com. That'll give you the link to pay with Stripe. Once you pay, I'll send you an email with the link to download the software and show you how to register it. If you need any help with the program once you get it, coding at marketmripro.com can help you with installation or if you have any concerns with the program. And again, join the top-down trader because that's the only mailing list that I keep. And waiting to hear back from my colleagues at Orange County about the June meeting. There is a chance that that meeting will be pushed up to February. That's fine with me. And I'm still planning on a late October, early November meeting down here in Florida, either by myself or with an emerging partnership I have, which I'll just leave it at that because people who know what I'm talking about know who I'm talking about. Let's take a look at the charts. So a lot of red here. So if you look at the 1-day close, this is the daily briefing tab. And I just put my favorite ETFs and some breadth things in sectors and themes. We can see that the only thing up was the dollar. Even volatility was down a bit today. That's kind of interesting. And if you look at the changes in the market, here's Bitcoin down about 0.5%. The laggard was Russell down 0.61. And the leader was the spider down 0.36, and both the Qs of the diamonds down about 0.5%. If you look at the percent change from the open, down a little bit from the open, but really the thing opened down and stayed down the whole day. If we look over the last 5 days, you could see VIX has been down a lot, as has the dollar, and the major indices have been as high as up 1% on the spider and down 0.36 on the Russell. We saw deterioration in breadth as the new highs minus the new lows at 52 weeks or 12 months, barely positive 12 on NYSE. We see a significant reduction in the number of new highs. And look at the new lows now over 100 and very negative on the NASDAQ. That's not good. The blue represents the percentage of sectors up today versus yesterday in gray, then the industries compared to yesterday. We look at the components of the S&P 1500, the NASDAQ, and the NYSE. And what we can see here is only 35% of the S&P 1500 were up, 27% of the NASDAQ, and 36% of the NYSE. That is weak breadth. That's not a good sign. If you look at the S&P 500 sectors and you get a sense of what's working and what's not, well, you had 4 things that were up. and they were energy, real estate, utilities, and staples. Now, energy is going to go everywhere, up and down, based upon news, what's going on with Russia and Ukraine, Venezuela. Um, but the rest of those are extremely defensive. So this was a defensive day. And if we look at the laggard was discretionary materials and financials, and even technology was down 0.45. From a theme perspective, hardly anything was positive. Exploration, social media, MLPs, which pay a dividend, robotics, data centers, and then barely positive Norway and telecommunications. And if we look at the big losers on the day, cannabis, and I think anybody who watches me at any time, I don't even look at these. They're small stocks that have been just brutalized over the years. And do we really believe that if they legalize marijuana, that these little companies that trade for a dollar or two are all of a sudden going to be the next Philip Morris, Altria? I don't think so. Maybe they'll get bought, but we'll see what happens. They'll be winners. We got gold miners, silver miners, and copper. We got lithium. We got metals and minings. We got EV. Some of the recent strength in the market were the big laggards. The timing briefing gives us a sense of where we are with the timing model. The weeklies, as we would expect, are holding because you've got to turn both the trending indicator, which we refer to as the bongo, and close below the WMA for the signal to change. And on the weeklies, we're nowhere close to the WMA. Yet on the cues, the bongos have changed, and you could see the trend has turned down. If, however, we look at the daily, snappy today, you can see we got changes today. We got the Russell has closed below the WMA and gave us a sell signal. Now, the last time this happened, it bounced the next day. So we're going to be watching closely the Russell today. Other than that, everything is holding with the bongo and with the price relationship to the WMA and thus in buy signals. So we have the intermediate term signals on the weekly are in a buy. 3 of the 4 dailies are in a buy. We're pulled back in an uptrend once again. And, you know, so far each of these have bounced. We'll talk about where they bounced in a few minutes. If we look at the US index ETFs, and now we're going to go to my handy thing here. This is the spider. So if we look at the spider, it had a barely negative session with the doji on Friday, and then another doji today and trading down 0.36%. There is nothing broken here about the spider, but you might expect it to just move up a little bit more this week. And as you could see, and you'll see on the rest of the indices, the yellow line represents a prediction of price looking at 5 years of seasonality. The green prediction of price looking at 10 years of seasonality. And the suggestion here is that after a couple more days of positive seasonality, we get into a little rougher patch in the beginning of January. January, the beginning can be tricky. People sell their losses in December so that they can reduce their tax burden. And some people, maybe me too, like to sell things in the early part of January because I might not pay my taxes on them until the following year. Um, we're supposed to pay quarterlies, and I do what my accountant says, but I'll leave it at that. You'll notice that the last couple of pullbacks have been relatively shallow. We had a pullback to the 50. We had a pullback and a reversal at the 100. A reversal off the 50 here. So we're in an uptrend. Nothing has broken down. The 17's above the 50, above the 100, above the 200. And if you look at seasonality, it's generally in a good part of the year, but it doesn't go in a straight line. So maybe a little bit short-term risk emerging. That is the spiders. If we look at the cues, similar pattern. You could see it definitely goes higher, but do we have another day or two of trending higher and then another pullback? And again, similar to before, pull back to the 50, pull back to the 50, pull back to the 100, almost to the 100. all healthy in an uptrend. And, we're a little bit off the highs, but it's not that we're a huge percentage. So I like to see a break above that line, and we'll be watching that. If we look at the diamonds, again, all-time highs were set here on a closing high, um, not far from all-time highs. A little bit of a pullback here, down 0.5%. Is this broken down and over? No. Could it drift higher for the next couple of days before it pulls back? Absolutely. We've had pullbacks to the 50, and the 100. We're still above the 17 with the 50 underneath, the 100 and the 200. Anything broken or nefarious there? Not yet. The Russell, we mentioned the timing model turned negative, but in reality, maybe it's just heading down a little earlier than the others are. Had a nice save here just below the 100. And really, we're not even that far off the highs here on the Russell. So yeah, it's broken down a bit. Well, I like to see it stay above the 50, but we shall see what happens there. The volatility today, this is interesting because the VXX was down a bit, but the futures, the VIX futures were actually up today. Look at that, up 4%. Now, that might be something to watch. George Lee used to say when the VIX was high, it's time to buy. When the VIX is low, look out below. And my interpretation of that is that actually is part of it, but I look out below when it starts to go higher, and I buy when it starts to drop from a high level. So that's worth watching. A little bit of concern. And the dollar has been our friend. And this was, and I'm going to talk to Praveen about whether we should treat that kind of like a split and close this gap some, because this was an ex-dividend. And so it looks horrible here, and I've got to figure that out. I guess the other thing I could do is, let's just see, do we have US dollar? We do have some of the futures. Here it is. Let's US dollar futures. Let's just switch it to that. And you could see it looks very different, doesn't it? And you could see down just a bit today. And I think I'll start using the US dollar futures instead of the ETF now for tracking because of that change. Definitely following the 200 down. And if you don't know from prior videos, way off the high. So doesn't look anything there to be concerned about just yet either. Let's take a look at commodities. Commodities today was a very different day. Um, I don't look here at palladium and some of the others and platinum, but today was a meltdown. And now let's take a look at how much melted and whether it's time to be worried. Um, Gold started the day down and got worse throughout the day, and down 4.35%. Pretty big drop. Sometimes it's better to be lucky than good. Um, Most of my gold position was in Nugget, and I closed all of that on Friday, not because I knew this was going to happen. I knew it could happen, but I closed it at the end of the day because the options expired and I decided to let them go and put the money in my account. I still have some EGO, which took a little bit of hit today, but not as much as the GLD ETF did. So we broke through this takeoff point. That's kind of disappointing. We'll wait and see. I think futures on gold were up a bit, but if you're down 200 points during the day and then you bounce 37 points at night, not exactly earth-shattering move. We'll see. I think it'd be nice to get back above this line. Do we pull back to the 50? Notice that we did reverse here at the 17. So gold took a bit of a hit today, and again down 4.35%. Silver. I did my video last night for stocks and docs, and I actually drew on the during the video, and I talked about how this looked like a climax run, and these don't end well. And then I showed a big line coming down. They didn't even give you a chance to get out close to the top. So this silver was down big, 7% move. Is there any reason why it should stop here? It's filled the gap. Maybe that's all it had to do. You still got ways to go to get to the 17 and to get down to the 50, 25% from here. So um, big move still could happen in silver. Be watching it closely. A bounce here after the sell-off wouldn't be a surprise. Not sure it would be the end of the sell-off though. Oil, oil's got this wedge problem and it can't get back above it. So oil not doing anything. It was up a little bit. Of course, it was up 1.65%. But boy, I look at it and I go, do I really want to be touching oil here? No. Natural gas gave us a nice reversal candle here, which we talked about at the time. It's trying to get back above the 50. I think I'd let it get above the 50 before I get engaged to it again. Up another 1.8%. And then we can look at the 10-year and the 30-year. 10-year was down just a bit, 0.56, and the 30-year inside day down 0.39, holding above the 200. So there was a lot of damage today in metals. In the rest of the markets, not that much. You'd expect low volume, not much movement. Um, Kind of what you got today. We just started lower and finished about where we opened. The big fireworks, I think, as you saw, are in the metals. What else can we show you? We can show you the buckets, which I'll talk about tomorrow. I'll just say it's neutral. Neutral to a little bit bearish, but no signals of any impending changes. My market breadth tool, I thought it was interesting. We can see the reversal here on the NYSE composite and on the NASDAQ composite. Still way above the 50 here, a lot closer here. Um, right off all-time highs on the NYSE. So something to watch. I didn't check the volume yet, so while I'm babbling, let me just do a quick look. Um, I have a subscription to Market Surge, and I like their volume tool. That's interesting. If this is actually real, it suggests the volume was up a little bit today. So what we see here. Yeah, I mean, you can see it's a little bit higher. A down day on both. Now, in my convention, a white candle means you closed higher on the day, period. A red candle means you closed lower on the day, period. If the candle is open, it means you closed higher than you opened. You could have red open candles here or white open candles. All it means is you closed higher than the open. It doesn't mean whether you were up or down. That's the color of the candle. And on a solid candle, you close below where you opened. So I could see on this candle that we opened here and closed down here. It was a negative day. So volume was up. You could see down here starting to turn down the amount of stocks above the various moving averages. And we look at the 17, the 50, and the 200. We know that the new high, new lows were negative on the NASDAQ composite, holding on the NYSE, but coming down. And you could see that they're coming down just looking here. And if you look at AD lines and up-down volume, also very negative. No new signals here, what I call the Ian signals. One thing that did signal today, or not signal, but made me look at it, was the green line here on the NASDAQ composite. 0.18 for percent new high, new lows, 13-week. That's not a reversal area, but it's getting close. So nothing here is overbought. 0.75, 0.64, 0.47, those are all pretty neutral. You can see in the magenta that the AD line is worst on the NASDAQ, followed by the Russell. Both the S&P 500 and 1500 are holding up pretty well. So you don't usually get reversals from all-time highs. So it's kind of funny that we're getting down to this level, but it just tells me across the short term, that there's a lot of damage in that NASDAQ composite. Now, I look at sector timing with different tools. I can apply my timing model to sectors, and I just look down here and I see if there's any changes. There are not. I can do ratio charts and see what's moving. You can see the strength has been in materials, communications improving. Energy's been pretty weak despite today. Staples weak despite today. Discretionary had been strong. Now it's softening. Healthcare is holding up. Utilities, there's an intraday split that I can't fix until the data vendor adjusts that. Real estate, you can see it's weakened. Technology is not doing much. Industrials has pulled back, but look at financials and materials are clearly where this market's leading. And you can see Bitcoin versus the spider way underperforming. I look at some of my favorite stocks with the same timing model. And it's not a bad time just to talk about some of the ones that everybody follows. Now, I'm in Amazon. I thought Amazon was ready to run. In reality, after breaking above the 50 in yellow, we've had actually, let me see which is which. 30-day WMA is in yellow. My bad. This one here is the 21-day EMA and the skinny. I think that's it. Yep, that's all I have there. I want to comment about that in a second. But we broke out above the 30-day WMA and the 21-day EMA. Now we're pausing here, maybe a little flag. I would expect Amazon to resolve higher if the market holds up, but we shall see. Um, you know, a lot of controversy out there about, and maybe controversy is a big word, a lot of discussions about what the right moving averages to follow are. Um, it turns out the 21-day EMA, the 17-day simple, and the 30-period WMA are very, very close, even when I'm looking at one day at a time. So I like the 17-day, I like the 50-day, and I like the 200-day simple. So that's Amazon. Apple, it's struggling to get back above the 21-day EMA here, but Apple's had a pullback. Apple still looks pretty good. Hasn't broken down, although the buy sell signal has. So probably would wait till it got back above the WMA, and I'll watch that buy sell signal. Wouldn't be necessarily dumping it if I owned it. And I do own some in my long-term accounts. Google has pulled into the WMA and closed higher. Um, Google still looks really good, probably the best of the mags. Meta trying to make its way back up, pulled into the WMA. Netflix, I talk about this every night and say the same thing, so I should just stop. But Netflix first quarter January earnings has been over the last 20 years my calling card of success. Has amazing seasonality and it allows people to start the year with a big win. I just have a hard time figuring out what to do with Netflix seasonality right now because even though I know it has great seasonality, it's in a takeout battle over Warner Brothers, and I'm probably going to stay away. Tesla, big down day today. We saw that lithium and EVs were weak, pulled right into the WMA 21-day EMA area. It has not broken down yet. Yes, you had a sell signal today here, but right now I'm not too worried about this. Where this is the daily, this isn't the weekly, and the daily is going to be much more volatile as we saw with the Russell. Nvidia um, teased us and then pulled back some today. It closed well off the highs, still above the WMA, still in a buy signal. And if you own Nvidia, you've enjoyed quite the run. Um, I, it's my biggest position. It's probably yours as well. Not because I was smart enough to buy a ton of it, just because I bought a bunch. It had a big split. You know, it's had a nice run. Microsoft struggling here. It's actually off of its lows, above the WMA, isn't a buy signal, but not showing a whole lot of momentum. I'm big into biotech, but I like playing Labu. It almost shook me out today. I've got a small piece left. I did take a lot of profits on Friday just because I knew it'd be funky, and I got to clear out some positions for tax purposes. Um, but you can see LABU still in a buy signal. We'll see if it bounces tomorrow. And I knew it was in trouble because there was a high profile biotech that had some negative readouts from data. And when that happens, biotech sells off because a lot of these biotech companies are pre-market drugs and they haven't been approved yet. When somebody's drug's not approved, in sympathy, they fall. But the same thing works the other way. When somebody's bought out, they all go up thinking they might be next. So it's holding here at the 30 WMA, but a big down session. Pharma holding up better. These pay dividends, and I think they're cutting deals with Trump, so the market thinks that they're in better shape or in good shape. Data centers just holding on here at the WMA, while the quantums, which gave us a little bit of a run up here, have pulled back into a sell signal. So now I'm not done, but I have a really good sense of what the market's doing and what I want to do. And as a top-down trader, that's where it starts. Do I want to be all in? Heck no. Do I want to be all out? Nah, Santa could still be here. Do I want to raise cash? Absolutely, not just for tax purposes. I think with the Russell going into sell mode, it tells me, or at least into on the daily, the pullback signal, to be careful. And the way you make money at major bottoms is you don't lose it before the bottom comes in, so you have money to invest. And so I like selling stuff at the highs of the market when it turns down, and I like committing cash when it's sold off and it starts to turn off. And head shakes can still hurt. If we go into my favorite tool, the JES layout, um, I typically look first here to see how many stocks we have. My filter for that number is price $1, volume 100,000 shares, and I look at the NYSE, the NASDAQ, and the Amex, and you can see we're at 3648. Um, Now, very quickly, let's just look at Spider here, and then let's look at the RSP just to compare them. Let's try that again. If anything, the RSP looks a little stronger to me and doesn't have as much of a down the next couple of days predicted by seasonality. Why is that important? Because I got to figure out what list of stocks I want to play with. If the spider is way outperforming the RSP, or let's look at the Q, and let's see how the Q is doing compared to the QQQE. QQQE is holding up well. So when the equal weights are doing as well as the cap weights or better, I'm going to probably look at a broader list of stocks. So let's go into top down and let's look at all of these. So in top down, I put every one of these into an industry group and a sector. So here is a list of the sectors. And if we look at 1-day performance, we can see the only things that were up on the broader market were energy and real estate. If we look at 5-day performance, it's healthcare, communications, and real estate. So I typically look at the 2-day, but I've been playing around with that, and I think the 5-day may be more useful. Now, when I've done that, I picked these three sectors because they were the top three. These are the industry groups that came up in those top three. And I could just look at percentage move now and pick the top 10. 1, 2, 3, 4, 5, 6, 7, 8. So when you look at them, excuse me, we have telecommunications, but that's kind of it for tech. We have a lot of REITs um, and some advertising. And then my favorites during times of trouble, McKesson, Cardinal, and Cencora. Now, down here we have the stocks, of which there are 169, that are in the 10 industry groups and the leading three sectors, the leading 10 industry groups, leading stocks. Now, the first thing I like to do is I like to filter out price and volume, less than 5, less than 500,000, and I'm down to 89. At 89, I could just start hitting through them and say, ooh, this looks interesting. Sort of pulling right into the 50. I like it. That blue dot is one of my trading signals. It's a CPR. This is crossing up above the 50, almost is crossed above. Um, this one looks interesting. So I might put this in, I'll just call it my Premier Picks. I right click, I'll drop it into Premier Picks, and I'll look at the next one. AIV, no. AMH, I'd rather buy above the 200. AMT, no. AMX, no. And I could go through these to see if I can find anything that looks attractive that I might want to buy. Now we're in a rotating market, so it doesn't surprise me, oh, there's my babies, that these things don't look that opportune. Why? Because we got the laggards are now leading. We saw the defensive plays that have been out of favor taking the lead. So I may look at it a little differently. Let's rank them by U. These are my positive impulses. Let's just see if we have anything there that looks good. This is a buyout. So we're going to skip it. ESRT, no. Care Trust, well, it's in an uptrend. Pull back to the 50. Looks like it's going higher. It had a momentum dot and a CPR today. Relative strength has crossed above. The spider OBV is above. I like that. I like that a lot. Let's see if it pays a dividend for me to wait. It pays a 4.1 something dividend. I could live with that. It's got earnings February 11th, 47 cents versus 40. Not much growth, but hey, it's a REIT. So that one looks interesting. Let's add that to my Premier Picks. Wherever it is, I know it's here somewhere. And we'll just keep going down. BCE, no, not yet. Here is another one that looks good. This is a nursing home and other medical institutions. Let's just add that. And I could go through this list and start to find things that look good. What I wanted to show you for sure, though, is I showed you already Cardinal, but let's look at Cencora, COR, formerly known as AmerisourceBergen. Nope, Cardinal looks a little bit better. And then McKesson, which to me has always been the stock, MCK, somehow is not on my list there. Let's take a look at McKesson. I mean, I love McKesson. I love all three of these. Of the three, it's the only one I haven't sold a business to yet. I still got this one. Um, and running right up to 50. Look, if this market gets tough, if you're worried about damage, these three stocks, McKesson, Cardinal, and Cencora, outperform in bad markets. They don't pay, this one doesn't pay much of a dividend. So that's one way of approaching top down. Now, another thing you could do is ignore the sectors. And let's just go for the 5-day momentum, use that for ranking. And let's just go through the top several. Very different groups. Now we ignored the sector. We took them just based upon the industry group. We still left our filters on, so there's a little bit less than 100. Let's look at the W. And we've got Data Bridge again. We don't care. Regency, Regencell Bio Holdings, LMT, Lockheed Martin. That one doesn't look bad. INDV, okay, ESRT. So there are different ways. We've been in Lilly forever. I think we must have given it out in the $700 range, as if I remember correctly. And I think it was on in this area that I first brought it up to my followers. Um, Was it then or was it before? It was in the $700 range and it went on a big run. Uh, So again, another approach. Sorry about that. I've had a bug ever since I went to India that's not shaking well. So that was my top-down approach. Sometimes I can't help myself, like every day, and I want to just look for the shiny objects. So I'm going to go back to the large group, make sure my filters are out, back to 3648, and I've built in some systems. And hopefully by tomorrow, my bearish systems will be built in. A plus has been my go-to long system. And let's just hit OK. And no surprise we don't have any. Why? Because it was the last 2 days in the market have not been great for momentum stocks. Let's see if we have any of the A's. And then I want to show you a new feature that we just built in. So I own Reddit, and God, it's hard to own. Oh my God, it's hard to own. Now, the good news is I've owned it since here, okay? And I'm going to highlight why I've owned it since there in a minute. But boy, it swings a lot. 240 down to 214, back up to 246, back down to 219. Had a great day today. It was up significantly on a down market. It was up almost 4%. Why did I get into the stock here? So we're going to talk tomorrow about some of my favorite setups. When I get these two blue dots in a row above the yellow line, that is my double momentum signal. It doesn't always work. Nothing always works. And you could see here, it really did not work. Okay. But the way that I trade, I never entered it there, and I'm going to show you why. But it has, from over time, been my favorite signal. So I scan for that every day. I look for the double momentum. I love it that it's in a squeeze. I love it that the relative strength has crossed over the moving average, as has volume. I love it that it's not extended. But more importantly, I loved it here because it took out a trend line. It didn't do that here. And the way that I trade is I buy high to go higher. So if I was to buy this, I would have said, if the stock trades above that point tomorrow, and then I would decide if I left it in or didn't leave it in, I want to get filled. Okay. So I would not have been filled on this bar because we opened lower. Now, probably got filled over here, although I thought I bought it in down here. But I'd have to go back and look at my data to see that. So that double dots is something that I like. EPG, well, PepGen Healthcare. Don't know anything about them, so I could always pull out the fundies. And on some of these little guys, I don't have a lot of data. Bummer. Can look at the news. 75% upside. Oligonucleotide therapies with the goal of transforming the treatment of neuromuscular da 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 da. Do your own reading. I don't know this company from Adam, which is why I buy LABU. So this is the A scan. And why did this fire today? The A scan requires you to be in a squeeze, requires your weekly bongo to be blue, so we know you're in an uptrend. It requires either a momentum or a breakout bar today. It requires a relative strength to be above its moving average and the OBV as well. And we could see here relative strength and on the daily and the weekly went positive today. The OBV has been above its moving average for 8 days. Actually, the relative strength went positive today and 6 weeks of positivity on the weekly. So PepGen looks good here. I just don't know them from Adam from a company perspective. We look at Reddit. We could see we had momentum and a breakout from a squeeze today with relative strength and OBV looking good. We're not extended, and the weekly is blue. So if I had to be in the market tomorrow, which I don't, and I'd like to see what the market does before I commit more funds, I like the distributors, and I kind of still like Reddit. Maybe it's time to add to my position. Now, what I'm going to show you doesn't exist until we push it to the Windows Store and everybody will get it. And I've got some enhancements coming. But somebody asked me, would I be willing to put my buy sell signals on the chart, specifically my A plus and my A's, so you can scroll back and look at them? That's a great idea. We're going to do that. But then I decided, well, Praveen decided one, I decided the other. Praveen said, how about, let's pick a date. Let's look at the spiders and find a good date that might be a good date to have been in the market. Let's look at, what day is this? November 24th. Just curious, as the market was rebounding after this pullback, were there any stocks of interest? So we go in here, we can go to November 24th, click on it, click on the reset, and take a few minutes. Whoops, there you go. That was a few minutes in Jeffrey time. Very fast. And these were the performance of all the stocks on that day. So Apple on that day, for example, they will be highlighted, and you can see Apple was up. Let's see what A pluses we had. And I didn't pre-screen this, so they may all be bad. Holy Toledo. Let's see if any of these did well. Well, there's Apple, and it did well for a short period of time. And I'm scanning for my double dots that occurred on that specific date. Alignment Healthcare, that worked. ALLT, yeah, kind of a tie. Arrowhead Pharma, wow. CNC, not great, but it's worked. It's up. Com, traded up and back down. Delta, wow. Data Corp, good. Elan, nope. Here's one that failed. EXPI, it went up the next day and it gave a reversal candle, and that is a sign of get out of here. Google, look what Google did. Whoops. Is that what it did? Hold on a second. Let's look at Google L. I guess it did. So Google went up and then it basically hit its high, all-time high, and came back. Grail ran up. HCSG, this is what you want to see trending up. Hologics, it's in a buyout percent. I don't even follow those. INSP. So again, it ran up before it topped. So it's not, you don't just buy and hold these. I'm looking for a move and no one knows how long. Let's look at TMDX. Again, it got the move, it just didn't hold. ZTO, yeah, big move. So the purpose of the scans are to find stocks that meet certain criteria. You have to make your own decision if those criteria are worthy of you putting in your money. We could look at A stocks on that date. And so it's not done great, but it's gone up from 9 to 10. That's a 10% move. Goldman, yeah, look, you're not going to find one win after another, but I think you're going to find more wins than losses. And yes, that's a win. And hopefully you use stops and that reversal would have gotten you out. So just a tool that we're building to give you the ability to go back, look at a given date and look to see what signals are being generated. I like it. Now, what's the other way of looking at it? I want to be able to give you a layout that says, show me every stock in the last 2 years that has had you pick the name of the signal, double momentum signal. And then we will list by symbol with all the dates that it occurred by that symbol. And you'll have the ability to go back and ask, Does it go back? Does it go up after it got the double dots? Does it go up after it got the double dots? Um, and the other thing, and I don't want to go into it deeply, but notice down here, all we're doing is combining filters. So what we could do is generate our own. And let's say we want to look for a pullback in an uptrend. We want the EMS to have crossed up. We'll take a multi-time frame CPR buy. Both of those are showing new uptrends. I'd like a weekly bullish reversal. I want good volume. I want it above the 200. I want the weekly bond go up. And I'd like to have seen it cross below the 17 and up above the 50. Now that's way too tight. There probably won't be anything there. And there weren't. So I can now play with my filters and um, take things out and see if I can't, you know, find something that I want to take a deeper look to see. So another way that we can look at it is try here. Let's look at pull back an uptrend, multi-time frame CPR, price and volume above the 200. Well, we got a lot of them. So now I can go back and I can look at when that occurred. Eh, that's not a good example. And get, ooh, okay, that was a good one. Good for 3 days. That's not what I want. This is when that popped on earnings and came back down. And I decide whether or not this is a good signal or not. Well, it's a good signal. Um, so I have the ability to create, you have the ability now to create your own filter. Find out when a stock demonstrated by looking at a specific date, what stocks were hitting that, or get a list of stocks and when they hit the various filters, and that can help you decide as well. I can't wait to bring this update to the market. We've got some new breadth signals we've added and a few other things we're working on. And like I said, I want those bearish scans too, because something tells me I'm going to be using them. Well, I went on forever. I don't usually do an hour during the week, but my wife's already asleep, so she's not here giving me the evil eye. She's wonderful. She lets me do this. I've been doing these for 20 plus years. Um, I never sold anything really until I started selling the new app. Um, and I like it that way. Education is something that I love to give. You all have a great day. If I don't do this tomorrow or Wednesday because the market's slow, Happy New Year's. But you know me, I'll be on probably tomorrow night. Take care, everybody. And come join me in that webinar. And if you don't have the Market MRI Pro app and you're interested, you got about a week, a little bit less than a week to get it at the 14.95 because it's not going to be at that price again. Thanks, everybody.